Okay, right. I'm going to be discussing my strategy for trading cryptocurrency. Now, I'm not doing this because I want to become a guru advising people how to make money on cryptocurrency. In fact, this is not financial advice, and I'm just doing this to try and give a few friends who've been asking me about cryptocurrency and how to get into it, how to do it without risking lots of money, etc., etc. So the first thing with cryptocurrency is you have to understand that everything you put in could go to zero. There's absolutely no question in my mind that you could lose everything you put in, and for that reason the UK Inland Revenue still kind of classes it as gambling. If you're a company and you're accepting crypto, then it becomes a bit different. But basically, taxation wise, my goal is to basically make sure I make my minimum capital gains allowance a year, and taking that out in cash, so that therefore is a tax-free accrual. And in addition, just in case the NRV got onto me, but additionally then, to try and increase my amount of cryptocurrency. So where I am now is I put a certain amount of money into cryptocurrency a couple of years ago. I basically got that money back, and now I have quite a large amount of cryptocurrency, nothing compared to what many people have, which I've accrued over time. And so it isn't really something I can guarantee to be an income, but it's something that, by using my strategy that I'm going to explain, has done quite well for me. And it's something that I only do in the morning and in the evening, and occasionally I might look at in the afternoon. And so it fits in quite nicely with me being able to do my work on my property platform and other technology. So that's kind of setting the scene. So really what this video is about is my way of explaining to some friends and family how you can get into cryptocurrency without basically risking too much, but actually see some kind of gain. Now again, it may well be, and I do consider this to be a possibility, that cryptocurrency could end up dropping to zero at some point in terms of its fiat-based monetary value. So be warned, do not put lots of money in. Okay? Now, I'll start with this actual talk. So, what are the advantages to trading crypto? Well, first off, I think there are very low trading fees, very low exchange fees. Yeah. The prices are volatile, which is a good thing, because what that means is the price goes up and down a lot, and what that means is you can basically take advantage, because you can pretty much guarantee that the price is going to fluctuate enough, so you should be able to make some profits if you get in and out at the right time. The other good thing about cryptocurrency is it's 24/7 trading, and so sometimes you can set some trades up in the evening, wake up in the morning, and there'll be some price action, which will mean that you've actually made quite a lot of profit. Now of course it can go the other way, but for me it's a good thing that the markets are international and 24/7, because you can even try to understand how certain markets might be responding to certain cryptocurrencies at certain times. So China might be making some particular move, Japan might be, America may be, and it can be quite useful to understand it from a kind of a global perspective. So what are the disadvantages to cryptocurrency? Well, one is it's risky. You can lose everything, and I mean you can lose everything. Yet you can even lose more than everything, because you can use what is known as leverage, and you can really put yourself in some very bad situations. So again, be very careful. Another thing with cryptocurrency is it is very complicated to understand, because to be honest, you should be trading in cryptocurrencies that you actually have some understanding about the project. So a cryptocurrency effectively might be used for helping to store files, it could be used for settling money, it could be used for loans. So each cryptocurrency has a different set of use cases, and I find it more useful to understand what those projects actually do, because like even in normal stocks and investing, it's a good idea to understand what the stock actually does, not just simply look at it in terms of money. Another thing is that there is a lot of uncertainty of cryptocurrency in terms of how governments may respond to it. Now, I've got my own belief system on this, and I don't think it's a concern, but there's a risk to it. Another big problem with cryptocurrencies is there's a lot of scams and risk. So I get people trying to contact me all the time, trying to get me to put money into various cash accrual type processes. Now, these scams are very common, and they're basically multi-level marketing or Ponzi-based schemes, and I can see them a mile off. Yeah, but for many people getting into this, it seems only natural that there's a lot of opportunity and a lot of people trying to persuade you to give you their crypto. So again, be very wary of the scams. So now, the way in which people trade cryptocurrency from a very high level, and indeed any asset, is as follows. You can look this stuff up yourself, but you have technical analysis, which is where you use charts and trends to try and understand price action. I barely use technicals, and I won't go into this in this discussion, but I do look at charts to try and make some decisions in how I set my buys and sells. We also have fundamental analysis, which is where you look at the underlying properties, like I was describing earlier, of the asset. So for example, if you're investing in a technology company, you might want to understand what their technology does. You might want to understand their competition. You might want to understand what the market's doing overall, and how they're performing against that particular benchmark or market. The final one is macro analysis, and this is linked to fundamentals, but it's more in terms of asset classes. So you'll see a lot of discussion over whether or not Bitcoin is correlated to the US dollar, whether gold is correlated to Bitcoin, whether they're negatively correlated or not. So you'll find discussions around, for example, oil versus the dollar. You might hear about, for example, precious metals, or you may hear about typical metals, industrial metals. And so macro analysis, even down to like governments and debt levels and expenditure, cash flow, this type of thing. So there's a lot of like, a good example would be is the value of the stock market, known as a Buffett indicator, which is in terms of what the size of the stock market is versus the gross domestic product of the country. Yeah, so there's all these kinds of macro trends which I use to try and understand assets. So what I'm going to do now is go through my actual strategy on trading crypto. And again, I say this in a way that although it works, it could completely fail in the long run, and I'm more than okay with that because I think I'm quite happy with how I'm doing this. Yeah, so I'll go through this quite briefly. And again, this is not financial advice. I'm not telling you to go and do the same thing, but I'm saying that for me, it's a way to basically trade in cryptocurrency without feeling like I'm risking too much. Yeah. So the first thing is strategy. First strategy I have is get back the money I put in originally. That means that I'm flat, and that means that I haven't lost any actual cash. Yeah. The next goal for me is to accrue more coins. So if I can accrue more coins, it may well be that at certain points that coin could be 10% of its original value, but if I can basically get more of them, if it gets anywhere near to its original value, I'll be in a much stronger position. And the other thing to do is to take profits, and I cannot stress enough how important it is to take profits. So a great example would be is that I have held Bitcoin. I tend to talk in terms of pounds because I'm British, so I've held Bitcoin and seen it drop all the way from 14,000 plus down to 2,500, and now it's at 43,000. Yeah, so it's a huge variety. Now it's at 43. Do I sell cryptocurrency? It's tricky. I have some other coins which I might look to sell as their prices go a bit higher, but I'm going to try and retain Bitcoin and other things. That's my personal strategy. But the key thing is nothing's going to make you sicker than if you held Bitcoin at 43,000 and it goes down to 1,000. Yeah. Are you then going to want to put £43,000 in to buy back 43 Bitcoins in the hope it goes to 43,000? So this is kind of an emotional thing that you've got to understand, and so a key way to mitigate that kind of like loss is to basically take some profits regularly. Yeah. So this is my experience of trading cryptocurrency, and I'll explain it. The first thing is avoid getting emotional. Yeah, it's okay to get excited when it goes really well, but don't get emotional over it at all. Another one I try to do is avoid panicking. There's no reason to panic. It's something that if you're doing this regularly, consistently, over a period of time, you'll get used to things going up and down. Another one is accept that you won't make maximum profits and that you will make mistakes. So sometimes what happens is I may have a particular coin which I set a very high sell level at, and I may not see anything happen for several months, and then suddenly it will go through the roof. I can't predict this. I just get a feeling as to when it will happen at some point. Sorry, got a bit of a sore throat today. Hopefully it's not COVID. The other thing is have clear systems and processes, and also be prepared to break the rules sometimes. So that's what I do. I sometimes make a decision that feels like things are going in a particular direction, and generally it pays off quite well, but sometimes you have to have a different strategy to what you're normally doing. But don't take risks. So, a bit more in general, sorry. My fundamental belief is only proper automated software can properly deliver results. And I was working on a software a year and a half ago, but due to other work I've not been able to finish this, and it's something I want to get back into. But basically this software will mirror my strategy that I have here, but in a far more effective way, with more flexibility, and I may put some artificial intelligence into it too, to really help to maximise profits. And at that point I'm pretty sure I'll have to start paying proper tax on this, because that's where it's no longer down to luck. You're actually then employing proper kind of technology to maximise returns. So before I show you this spreadsheet, I'll describe my basic system and process, and it's really simple, so you can record this and watch it again and play it back slowly. So the first thing I do is I set buys. That means I set to buy a cryptocurrency below the current price. Yeah, this is what is known as a limit order. So I say, let's buy this cryptocurrency at £5 cheaper than what it is today. Yeah. When these trades execute, I set in a sell above the original price. So if I bought it at £5 cheaper, I set in a sell at £5 more expensive. Now when this sells, I then put in a buy below the sell price again. And I do this in multiple coins over time, and eventually what happens is you end up with all of these various positions, which is basically where you own either money or you own cryptocurrency, and over time you'll find that you've got buys and sells spread out over a long price range, and you'll be tempted to kind of close certain buys and sells down, but you'll often find they will come back to where they were before. And so you have to be very patient, and this is a long-term process. It's not something that you're going to make huge amounts of money very quickly. This is something that you do over, say, several months to a year. And what I found is that in the last year I've basically accrued quite a lot of money, not lots, and most of it's in coins, but I've accrued quite a lot of capital, and I haven't really cashed it in very much because I don't want to basically get out of crypto too much. So it's a very, very kind of slow process, which by being calm and applying my strategy has done quite well for me. So this is how I actually do my trading. So what I tend to do is most days I check the trade positions, prices, morning and evening. Sometimes I don't see any movement for weeks, so I don't really change anything. Sometimes I can be at a loss for a good while, which I have to kind of accept. And also, when there's big price action, we may have a lot of trades executing, and I'll then need to spend maybe half an hour putting in new trades. So sometimes, for example, if Bitcoin goes up quite a bit, I may have to, and it sells, I may have to put in buys and other things. And so it can sometimes take a bit of time to do this, but it's never more than, say, 20 minutes or something like that, half an hour a day. But I tend to keep an eye on this market because I'm interested in this stuff. Right, now something else, when I will break the rules. So sometimes if the price drops a lot, I will buy a bit. Yeah, I'll buy a bit more. If there looks to be a big upwards price move, I may cancel some sells. Now, funnily enough, when you do this, often it doesn't always go your way, but it can sometimes. So I don't try to chase, there's a saying in trading, I don't chase the market, because typically things tend to come back to a certain point and you get an opportunity again anyway. So I do sometimes cancel sells, and occasionally I'll panic a bit, which is what I said you shouldn't do, and I might sell something when I probably should have been a bit calmer and waited. So everybody makes mistakes, but generally that's how I trade. Another thing I don't do, just so you know, I don't do any stop losses, nothing like that. I won't go into the details of why, but there's reasons why I don't do this. And sometimes what I would also do, if I get a very strong feeling that prices are going to drop a lot, what I may do, even if my coins are at a loss, I may sell quite a few, and I then may buy them back at a lower price, so that I then end up with more coins, and in the hope that the price goes up again. Yeah, it's a long-winded way of doing what's known as shorting, but without incurring the infinite upside risk. Yeah, so that's something I do. So what I'm going to do now, I'm going to show you my spreadsheet and see if you can follow along and watch a video again so you understand what I do. So there we go. So what I'm doing, sorry about this, I don't know what's doing this. Right, so what I'll do, I don't know why it's got this the long way around. Anyway, right, so this might be quite hard to follow. I don't know why this is. Let's go back this way. This is worth watching, by the way. This is going to help you a lot. Right, so this is an entirely fictitious example, but it's really worth understanding. Okay, so what we have here is we've got a series of events going down here. Along here, we've got what I call coin instances. So coin 1, coin 2, coin 3, coin 4, 5, 6, 7, 8, 9, 10. So imagine you have £1,000 you wanted to put into cryptocurrency. Now, never use the word invest. It's not investing. So what some people would do, they'd say, oh, I know Bitcoin's at 40,000 and it could go to 50, so I'll buy £1,000 worth at 40,000. And then of course what happens is the price drops to 33. Oh no, it could go to 20 and I could lose my money, and I could basically end up being about £500 short. Well, that is what happens with most people. They basically buy at the top, and then what happens is they see a drop and they sell it because they panic, and that's a disaster. Now, there's a common methodology called it's called dollar cost averaging, which is where you buy over regular intervals, you buy a certain amount of day, and the idea is by doing this you tend to be benefiting from buying at low and higher prices because of price fluctuations. And what my strategy is kind of like a super extension of that, and I'll explain it now in a bit more detail. So imagine we have £1,000 and we've got these 10, we decide to put in £100 and try and buy 10 amounts of coins. Yeah. So I say, well, let's buy some coins at 95, at 94, 93, 92, 91, 90, 89, 88. Well, the first thing is, this is about a 15% variation. Now, Bitcoin, this particular coin could actually drop to 50%. So you might decide to not do it at 86, you might decide to set one buy at 70, maybe at 60, and then maybe some more slightly higher. But this is down to you to decide. And here we have the amount of coins that gets purchased based upon splitting this price. So you're not guaranteed that the price won't go up forever, but my experience tells me that it's always fluctuating, and it will go up and above and below a particular price point. So here we see we've got a total amount from round 1 of 10.95. So if we just paid £100 and we put 1,000, we would have got 10 coins, but by doing this we've got an extra 0.95 coins. Now the next thing is, we may find that these trades may not settle for months in the future, but these ones might settle within a few days to a week. We just don't know. So over time you'll end up with lots of different positions and trades that are open, waiting to buy a coin. So what we have here is we have a sell price. So we've set our sell price at £5 above the price that we paid for it. This is just a simple example to show you, and we can see that for each coin we get a slightly different amount of profit, and for the coins that are cheaper it's £5.70, and the ones that are more expensive it's £5.25. So we've got a slight profit on these coins here, and so we can see that we've ended up with £54.75 profit from the round 2, the sells. So what do we do then? Well, we then do another round 2 price buy, yeah, and we do the same thing again, we get more coins. Now we've ended up with 11.667 coins, yeah, and so between rounds, this last round we've got 0.71 coins extra, and on the face value of £100 we've got 1.667 coins higher, and so obviously the profit is £166. So within quite a short space of time we've almost increased our profit by 20%. Now this can take many months, it can take a few days, we just don't know. But if you do this with several coins, and you basically keep doing this, you will make more coins, and you will be able to get your profit back that you put in. There's no question in how I've done it. Now again, it's not financial advice, but I wanted to put this online so that people who ask me how to trade cryptocurrency can get a very clear understanding. Now, I haven't gone into anything in terms of what exchanges I use or the coins that I use and my strategies for finding coins, because I'm a technologist and I've worked in finance quite a bit. I've got a different strategy for what most will have, and for me to say which coins are the better ones, I actually just tend to focus on the ones which are the higher market capitalisation, so the biggest amounts of money in those coins, and then I pick a few slightly off the wall ones which I've done reading into their projects. But what I don't do, I don't try in the slightest to try and become a day trader and spend all day doing technical analysis, because I'm just too busy. So this is my way to try and get slightly more coins and to end up with, hopefully, something that if the economy changes, at least I've got a certain number of coins which may become useful. Yeah. So I'll leave it there. I may do this again and improve the kind of the content, but that is my strategy for trading cryptocurrency. And remember, it's not financial advice, it's just a way to not put too much money in and to gain exposure to cryptocurrency, and with the goals of getting some more coins and getting your money back. Okay, so thanks a lot, take care.